Okay. Islamic commercial law is a jurisdictional law around larger businesses and the commercial interactions uh, as permissible by the Sharia. Now, the Maqasid al Sharia in transactions, the theory of contract, main principles of Sharia compliance, essentials contracts in Islamic finance, key Islamic commercial contracts, sale-based contracts, lease-based contracts, partnership-based contracts, sources of funds, application of funds, and responsibilities of Sharia board. There is Maqasid al-Sharia in transactions. The objective in the outcome of the transaction and in the terms of the contract. More benefit than harms in the outcome of the transaction. Removal of hardship. However, the maslaha should be genuine, not fictive, and general, not personal. An example is efficiency empirical studies. For the balance of terms of the contract, we have the prohibition of those contracts which comport injustice and in one form or another, such as ribawi contracts or garer or maisir transactions, balance our equivalence in the rights and obligations of the contracting parties. The interests of the contracting parties should move in the same directions and partnerships. An example of this is analysis of a legal documentation. Modern Islamic finance theory of contract. The pillars and conditions of a contract in Islamic commercial law are contractual expression, contracting parties, and subject matter. For the contractual expression, offer and acceptance are main priorities for a clear consensus corresponding offer and acceptance. Contracting parties, offer and offeree, are of full contractual capacity, legal authority to contract as owner and in possession of asset, the legal representative, agent, or guardian. And the subject matter, goods and assets, price, consideration, something of value, ascertainable, and illicit. Sharia compliance main principles: contracts should have mutual consent and avoid interest, uncertainty, gambling, and other prohibitions like liquor and pork, as well as lawful contractual objective. Essential contracts in Islamic finance, underlying principles utilized with the diversifying products of the IFS is very important as they separate IFS from conventional products. Contrary to the conventional finance, which is a specification-driven product, Islamic finance is more structured and principle-based product. Rules and regulations will differ from one product to another depending on the structure employed. In general, various underlying Sharia principles they have utilized in diversifying products of Islamic banking and finance. They can be summarized as sales-based products, lease-based products, participatory products, and fee-based products. Now, that sounds confusing as is, but it's not that complicated. Once you get the hang of the different products, you will see that there is underlying similarities between all of them. Encouragement of trade by mutual consent. The Quran encourages work and trade. The Prophet ﷺ himself was a trader. The encouragement of trade is evident by the many instruments and trade available during the Prophet's lifetime ﷺ, in Islamic history thereafter as well. Business contracts recognized in Islam. Contracts of sale and purchase, bay', include all its subdivisions like normal and spot sale, markup sale, murabaha, deferred payment sale, BBA, sale with advance payment but deferred delivery, bay' al-salam, sale of future delivery of goods with flexible payment of the price, or manufacturing contracts, bay' al-istisna, sale of currency or sarf, etc. Some controversial sales sell in buyback, for example, or sale of debt. Islam recognizes partnership contracts, which are mainly based on profit and loss sharing. Mudharaba and musharaka A relatively new invention in this regard is Musharaka Mustana Kisa. Islam recognizes public and private project financing, such as leasing for private endowment, private public state treasury, public modern forms of private project financing, operational lease, and financial lease, AITAB, hybrid contract. Now, these are many different details among all of them, but those are the summed up short version of the setup for the recognized public and private project financings. Islam recognizes other additional contracts to provide security to the parties in a contract. They provide security, suretyship, guarantee, mortgage involves two parties. The security contracts are normal combined with other types of contracts. The contract of BVA may be secured by a contract of security involving collateral. Other contracts recognized in Islamic law, contracts of trust, safekeeping, contracts to do a specific task and commission, gratuitous contracts, trading contracts, investment contracts, and supporting contracts. Maraba Bay Mojal, sale of a commodity at a cost price plus a known profit. I bought the commodity for 1,000 FCFA and I am selling it at the profit of 200 FCFA. I am selling this commodity at the profit of 100 FCFA for every 1,000 FCFA that I spent for the cost. Okay. Legalized by the Quran and Sunnah, general conditions are applicable. Contract based on trust, mode of payment, cash or deferred, integral, or by installments. The deferred price can be higher than the cash price according to the majority of jurists. The merchandise must be delivered on spot. Possibility of guarantee. Is there a ceiling for profit? Salam. Sale in which the advance payment is made to the seller for deferred supply of goods. Istina, a contract of sale, of specified items to be manufactured or constructed with an obligation on the part of the manufacturer or builder to deliver them to the customer upon completion. Legalized based on Sunnah, Istihan, and Darahura. The object of manufactured and delivered in the future. Payment can be prompt, deferred, or in installments. Normally, it will be progressively or proportionately with the progress of the work completed. Ijra, leasing, the transfer of usufruct, the use of an object or the services of a person for the consideration. Rent or ujra, in the case of hire, and wages of urge. In the case of employment, renter is liable to take care of the object according to customary requirements. Possibility of subleasing. Musharaka, form of partnership where two or more persons combine either their capital, labor, or creditworthiness together to share the profits, enjoying similar rights and liabilities. It's legalized in the Quran and Sunnah. The allocation of profits must be based on percentage of profit and not a fixed sum or percentage of capital. Profit sharing can be agreed by contracting parties. Loss must always be borne according to the proportion of investment. Mudaraba is a form of partnership whereby the capital is provided by one of the parties called investor or Rab al-Mal. Work and labor is provided by the entrepreneur, Mudarib. Both parties share the profit, which is divided according to the mutually agreed term of the contract. In the case of loss, the investor assumes the financial loss while the entrepreneur loses his time and effort. Support contracts, card, deposit, agency, or guarantee. Types of contracts: saving, current, term, and investment. For the saving and current, the card Wadina Yad Daman. For the term, Wakala and commodity Murabaha. And the investment is Mudaraba. Current saving account based on card, the card interest fee loan. is a gratuitous contract. The Islamic bank related services to the account comes from the depositors. Saving current account based on current, the principal is guaranteed. What is the difference between two types of account? No contractual remuneration. The issue of hiba. It is possible to announce the rate of hiba ex ante. Withdraw at any time. Liquidity risk. How to deal with overdraft. It is possible to check the sources of funds. Illicit money laundering. Investment account. Underlying concept, Mudaraba principle of PLS, profit and loss sharing. Rate of return depends on profitability of the investment and duration of the deposit. The functioning of the account is as follows. You see, the bank goes to financing investments, and those financing investments permanently go past the loss to a profit, and that goes back to the overall percentage that you would get back from giving to the bank in general. Activities explains the previous slides. The depositor opens accounts and enter in Mudaraba contract with the bank, and the Mudarib and the bank uses the funds in financing investment activities. If there is a profit, it will be shared according to predetermined ratio between the depositors and the bank, respectively. 4. If there is a loss, it will be borne by the funds. Structured products. These types of products are developed to meet the needs and conditions of category of customers. The basic concepts used are Wakala, Murabaha, and Mudaraba. Commodity Murabaha is certainly the most popular of these products. Besides these deposits and other sources of funds is the equity contributed by the shareholders who are the ultimate owners of the bank. Equity capital is not guaranteed, neither is the return. However, the bank management, which is acting on behalf of the shareholders, must run the bank with due diligence and carry out the mission in a professional way. Use of funds. Retail banking and corporate banking fall under quite a few more home financing, car financing, personal financing for the retail banking, the term financing, investment, trade financing, and working capital for corporate banking. Home financing. In general, the flow of transaction is as follows. A customer identifies a house he wants to acquire, and then approaches the bank and negotiates with the conditions of the financing. The bank may buy the house and resell it to the customer with a profit margin, murabaha, or the bank enters into a partnership with the customer to buy the house and lease it out for later to the latter, who will periodically buy the bank shares till the extinction, or the customer and the bank enter into a contract of manufacturing. Okay. Home financing explained previous slide. The client identifies the house he wants to buy, but he does not have the necessary cash. The client approaches the bank and discusses with the conditions of transaction. The bank buys the house and pays the price for the cash basis. The house is delivered to the bank. The bank resells the house to the client, profit margin. The client pays by installments. Car financing. In general, the transaction is done as follows. He approaches the bank, negotiates with conditions. Profit margin of the bank leases a car, and the client followed by another contract and transfer of ownership. Personal financing. It does not necessarily involve the acquisition of an asset, even though in theory there exists acceptable solutions. In practice, by IB utilize controversial products as far as Sharia is concerned. Ex Balilina Taruk. Corporate financing can be done based on the concepts. Murabaha, buy the asset, need and price client, and the sells ladder at a profit margin, token price, or at market price, or as a gift. Term financing investment continued. Mudaraba and Musharaka. With this formula, the IB enters into a partnership contract with the enterprise for a given project. The formula is not popular. There are many explanations for that. The risk is high, agency problem. the current structure of the IB. Working capital financing. Usually, many IB have recourse to products based on INA or Taruk. Murabaha credit line seems to be a good solution for working capital financing. Murabaha concept has already been illustrated. The MCL, the following characteristics should be taken into account. Working capital financing continued. The EC provides satisfying guarantees to the IB. The MCL constitutes a series of several murabaha. The amount of profit as well as the payment period should be precise. No debt rescheduling. Illicit goods are excluded as well as expenses such as salaries. Trade financing. A letter of credit can be issued by the IB based on wakala or murabaha or musharak. Trade financing continued letter of credit scheme. So basically, a delivery of merchandise is between the client and beneficiary. The beneficiary goes to release the documents to Bank A, representative of the seller. The LC delivered the release of documents to the Islamic Bank, and Islamic Bank goes back to the client and return of IB. Trade financing continued. Responsibilities of the Sharia Board. Now, the Sharia Board is an organization that is based on identification and disposal of non-Sharia compliant earnings, or advise the board and directors. Certification of permissible financial instruments through fatwas, Sharia audit, verification of transactions, compliance with issued fatwa, ex post Sharia audit, issue report to certify the conformity of Al-Fin transactions with the Sharia principles, and the calculation of payment of zakat, as well as advice on the distribution of income and expenses among banks and holders of AH. That's it for this session. Questions in the comments, rate, comment, subscribe.